3M stock is down 60% from its all-time high back in 2018. Another company in 2018 that fell hard. After Ted Cruz went after Mark Zuckerberg and Facebook, the company went from $210 per share down to $140 per share, a 33% drop. Do you even remember that? If you're like me, you don't even remember that. Last year, Facebook fell from $300 and some down to $88, and now it's back up. The negative sentiment follows companies. 3M has had a lot of issues when it comes to these lawsuits that they've now settled, but there's a lot of negativity around 3M. Let's go see if this is an opportunity. Your Uncle Paul and Mo are going to go look at 3M stock and walk you through the process. Guys, I own 3M stock. Do not buy it just because I own it. I'm here to teach a process. If you can apply that process to every investment you make, you will do very well. But it's important that the process works for you. You're not going to agree with everything we talk about here, but let's dig in on 3M right now. And the most attractive thing about 3M is what, Mo?
The price.
Well, that dividend now of 6.8%.
Is it sustainable?
So that pays out about $3.3 billion on their $5.4 billion over the last 5 years. So they can afford it. This is probably not a fast-growing company.
They can.
So paying out dividends is kind of interesting. But I will say this.
Big chunk of free cash flow.
So look at this though, Mo. Last year's free cash flow, $4.4 billion. Last year's net income, $1.5. These lawsuits, the write-offs, et cetera, it's the timing of it. I love it when the free cash flow is higher than the net income. That price to free cash flow right now is 11.
Mm-hmm.
So why aren't they buying back a ton of shares?
I don't know.
That's what I want them to do.
Let's see if they have
I actually want them, unpopular opinion right here, cancel your freaking dividend and take this $3 billion and start buying back your shares.
That stock would go to $40.
Look at this. The market cap's only $49 billion for the company. If they spent $3 billion over the next 10 years buying back the shares and the shares stayed this low, they'd be buying back 2/3 of the company. You would own 3 times more of the company than you own today just by holding your shares and not buying a single share more. If that was shocking you, what I just said, you're probably like, wait, what? That's what's great about cheap companies. Cheap companies that have good cash flow can buy back their shares at cheap prices, giving you, the owner of those shares, a bigger and bigger piece of that company. That's what we want them to do. Mo, go ahead.
So in 2018, they put forth a $10 billion share repurchase program. They still have $4.2 billion remaining.
Oh, wow. That's almost 10% of the company.
Yeah, there's no expiration date on that.
Wow, let's see their transactions. Do they have any show of transactions for it?
In the first 6 months of 2023, the company repurchased $29 million.
$29 million?
Compared to $773 million of its own stock in the first 6 months of 2022.
So let me understand this correctly, guys. You guys, 3M, here said, hey, we're going to buy back $780 million. But here, you're like, we're going to buy back a lot less.
Even though a program is in place. It's not even like you need to go and seek a new program.
Strike one, 3M. Strike one. I love it when companies do this. Companies sit there and see their stock go down and they get scared to buy back shares. That's when they should be absolutely be buying back their shares. Reward those shareholders who are stuck with you. Paying dividends can reward shareholders, but a better and more tax efficient way is buying back inexpensive shares. All right. Let's go check out the 8 pillars on 3M right now. All right, guys, remember, if you're part of our community, you can customize your pillars up to 12 different pillars. But net income is down 6 points because they showed a big loss in the last year. So it's down a lot. Revenue is up. Free cash flow is down slightly. The debt's showing a little bit, higher than we want. But everything, like I'm looking at this going, okay, fine. This doesn't worry me. 3M makes a lot of stuff. I'm not looking at 3M going, like, if somebody told me in 10 years 3M was going to be gone, I'd be like, whoa, what happened? That would shock me.
I'd be shocked.
So I look at this, is this just a lot of negative news around the company? That's the big question you have to ask yourself.
A lot of negative news around this company.
Why don't you go over some of the negativity?
So 3M, this combat arms settlement, this has been going on for quite some time. It's the earplug litigation with the military. On August 29th, it announced that it reached an agreement with the court-appointed negotiating plaintiffs' counsel to resolve the issue. They are going to contribute a total of $6 billion between 2023 and 2029. They also, what was the water one, the clean water one that they just settled recently?
Was that was it 10 billion? I think something like it paid out over like 15 years, 13 years.
Yeah.
Guys, Guys, that's going to hurt their cash flow for the next 13 years.
Yeah.
And same with the settlement. But they're going to take the loss very early on, move on from it, keep going.
So this is from August 1st of this year. 3M completes the sale of dental local anesthetic portfolio asset. It was a $70 million purchase price.
Oh.
So they're selling off some stuff, local anesthetics. Yeah.
That's interesting.
Yeah.
All right. So that's the news on 3M. Mo, what are our bull and bear cases from our community members?
So the biggest bull case I saw here that I wanted to read first, this is from Dalton, holds 56.32% of medical equipment and supplies market share as of second quarter of 2023, while currently holding around 32,200 patents with 67 active, while acquiring
67% are active.
67% active, acquiring 3,000 per year. This company's not going away. It's a matter of...
They make sticky notes. They make Post-it notes, too.
They're not going away.
They make tape.
Yeah, they're not going away. Okay, let's go to the top here. D-Money. Strong 5 and 10-year ROIC. Strong business model with products used daily in homes and offices. That's very true. Higher free cash flow and net income. Low share price can be a benefit for share buybacks.
And their 10-year ROIC is like 14%. It's very high. Recently, it's a lot lower because of all of these charges to the company for these lawsuit settlements.
He has here a boring company with minimal revenue growth, litigation risk. I'm assuming he means a bear case there.
Yeah.
Let's see. XPI value. This guy posts every single one.
I'm just going to call him p-value because it's too hard. I don't even know what the ZIL p-value is.
Diversified business model. 3M operates a wide range of industries. Yes. Healthcare, consumer goods, safety, graphics. They're in everything. They absolutely are in everything.
Minneapolis.
Yeah. Let's see. Do you think that they have a moat? I think so. They just do everything that everybody else does.
Yeah, I don't think anybody's going, oh, is that 3M? Yeah, let's buy. I mean, I don't know. I just think they're a very diversified company with a lot of different revenue streams. It's not going to be sexy, as they said. You're going to hopefully buy this company cheap, and they're going to buy back shares, and I'm sure people who love it are going to get paid a dividend.
The one thing I do think they have a moat in is command strips, because I will not buy any other brand except for 3M because they don't work.
What is a command strip?
What? Those things that with the Velcro that you stick and you can put pictures on the wall or
I don't know. It's called command sticks. Strips, whatever.
Thank you. Economic slowdown. A slowdown in the global economy could hurt 3M's revenue.
Is that true?
He wrote, don't think it really matters in the long run. Yep.
So let's see what analysts are saying about 3M. Let's check that out. Look at this boring company. $8.97 per share for this year for earnings per share, growing to $11.47 in the next 3 or 4 years. Nothing sexy. Let's look at revenue growth.
Really not sexy.
Yeah, 3% a year, 32 billion to 36. Guys, again, this is not a sexy company. This is not a company that's can compound on itself like crazy. But this is a company when it was at $210 a share, we're like, why? But now it's at $88 a share. Okay, it's a great place to start looking. A company that has a diversified stream of revenue and profit that's been hit hard lately. If you have the ability, the stomach to be able to say, okay, but what's reality here? Can I get a good opportunity here? Right, Mo? Mm-hmm. Now, you don't own 3M.
No, I don't.
I do. Mo does not. Again, don't buy it just because I do. I'm willing to wait a long time on this company. Okay? Unless my thesis changes, something big happens, and I say, oh boy, I'm sitting here willing to wait. All right, so it leads to the next question, which is?
What do you pay?
What's the right price to pay for 3M? Now, again, our stock analyzer tool only factors in the income and cash flow, nothing about the balance sheet. Now, guys, you've heard me talk about the community and the software that comes with it. And I'm not asking you to make a yes or no decision right here, right now. What I am asking you to do is to make an informed decision. And you can't make an informed decision without being on the outside. You have to get on the inside. You have to get in there, use the software, talk in the community, engage. Everybody who does it absolutely loves it. So that's why, just like if you were to buy a car, you need to take a 15-minute test drive. I'm asking you to take a test drive of the community and our software. And we're offering it for 7 full days. And I'm so confident that along that time somewhere, you'll love the software so much that you'll buy it for a year. And if you don't, no harm, no foul. No offense taken. Keep watching our videos. Keep learning. And at some point in the future, when it makes sense to you, I'm very confident you'll come back and do it. So go to everythingmoney.com and sign up for our free 7-day trial. Mo, when was the last time you did 3M in our...
It was April. And I just went in and changed a lot of my stuff.
I did mine August 22nd.
Okay, let's see what you got.
All right, so here are my assumptions because we have our history in our stock analyzer tool. I did revenue growth of 1, 3, and 5%.
I did 1, 2, and 3.
Okay. Well, more conservative, but I figure with inflation and things like that, I'm okay with that. Now, profit margin. I did 10, 12.5, and 15.
I did 11, 13, and 15.
And the thing is, I look at yours going, yeah, I mean, they did 13.5 over the last 10 years, so I don't think yours is.
I was basing it off the 10-year.
Yeah, mine's probably way too conservative, but I was more aggressive on the revenue side.
Mm-hmm.
So free cash flow margin, I did the exact same thing.
I went a little bit higher. I did 13, 15, and 17.
Because of their free cash flow being higher.
Yep.
Yeah, what am I doing?
Over a decade.
You're right. I'm an idiot. I'm going to increase that. I'm going to go 11.5, 13, and 14. No, why am I doing that? 12, 13.5, 12, 14, 16. Boom. And that's even low. That's incredible. But remember, they're going to have their free cash flow hit from those lawsuits coming in.
That's true.
All right, now PE. Now, guys, this is the PE at the end of your analysis, the end of our 10 years, not today. What PE would you sign for this company, Mo?
I did 12, 14, and 16.
Okay, I did 13, 15, and 17 because good ROIC, have some issues temporarily. I think this is my bias going with the news lately and just trying to be more conservative. I actually think this is a company that could justify a 15 on the low side because it has a diverse, it's going to be around for a long time. It's got a good return on invested capital. I'm actually gonna put it there. I'm gonna go 15, 17, and 19. For both. Now, for your desired annual return, guys, this is essentially your margin of safety. You can get 9 or 10% from investing in a long-term ETF. So, what return do you need to own 3M for the next 10 years?
I did 10, 12, and 14% because I beat it up so much.
I did the same. So basically, I sat there and said, okay, if this low stuff happens and it sucks, I'm willing to get a 10% return. But as I make my assumptions higher, it's less likely to occur. So I want a higher return, increased margin of safety. Now, guys, I'm going to hit the analyze button here. I need you to stick with me just 1 or 2 minutes longer. Stick with your Uncle Paul. I'm going to sit here and explain these numbers to you. Again, if the numbers come out green, don't just go out and buy the company. Understand it. Join the community. Talk to people in there about what they understand about the company. All right. Boom. Low price, 75 to 90. High price, 130 to 140. Middle price of 100 to 112. Mo, what did you come up with?
So I had 75 to 85 on the low. The high side of 102 to 115. Middle, 87 to 101.
Okay. So if you paid today's price for it and my low assumptions occur, you're going to make about 10%. If my high assumptions occur, about 16%. And my highest assumptions occur, 21%. Guys, check out our community. Check out the software, everythingmoney.com, 7-day free trial. Check it out.